Hello everyone, welcome to CryptoPi, the hub to transform trading using technical analysis and risk management. In today's video, I want to talk about two tools which I created using Claude AI for understanding what is the risk to reward ratio when compared to win rate, or what should be our risk to reward ratio when compared to the win rate of the trading strategy. And the second is how can we calculate the position size when we want to take an entry, either going long or short, doesn't matter. But before I proceed with the tool, I want to briefly share the disclaimer that this tool was created using the AI model, and we all know that the AI models are not very accurate and they tend to make mistakes. There are bugs in the tool. Though I have checked for them, I have tried to remove the mistakes and remove the bugs, but it is still possible that there could be something which might go wrong. So use these tools from educational point of view, and if you want to employ them for trading, do check them before, do your own research. The CryptoPi channel is not responsible, and neither am I, or neither is the tool itself. So use it for fun, learn from it by trying it out, and hopefully you like it. So we can move on to the tools. But if you like the tool, then do hit the subscribe button. And if you really like the tool, then hit the like button as well. And if you're just amazed and mind blown with the tool, then do share it with your friends. All right, enough of that. The first tool which I will talk about is the risk to reward ratio versus the win rate. And yeah, one more thing before I start, both the tools are free to use, so it will not cost you anything. The links for these tools are in the description, and the only thing which will cost is your time for playing around and learning with them. Okay, the first one, which is a risk to reward versus win rate tool, that helps you find what should be your risk to reward ratio for the win rate of your strategy. So let's say if my technical analysis, so whatever strategy I have for my technical analysis is successful 50% of the time, then the minimum win rate which I will, so the minimum risk to reward ratio which I will need is 2, or maybe I can go slightly less than 2. Let's see, if I go to 1, then I am in the break-even zone. If my risk to reward ratio is 0.9, then I'm making a loss. Now, if I want to be just have a little bit of win, then I will need at least more than 1. But we see from this plot is that you don't need to have a very high win rate if you balance your risk to reward ratio or manage your risk to reward ratio very well. Let's say my win rate is around 40%, or let's say 30%. I will change my win rate over here to 30, and then it tells me that I'm in loss right now because my risk to reward ratio is 1.1. If I go to 3, I am in the profit zone. If I have a very good risk management, and let's say if I go to 10, then it doesn't matter what my win rate is. It does matter what the win rate is, but it doesn't matter that it is so low. In this tool, what you can also see here, if you hover over the question mark, you see what exactly it means. The risk to reward ratio is the ratio of potential profit to potential loss. A 1 to 2 ratio means risking $1 to potentially earn $2. The win rate, on the other hand, is the percentage of trades that are profitable. So 60% win rate means 6 out of 10 trade are the winner ones, and for 4 of them, the strategy hit its loss or stop loss. There is also a calculation for expected profit per trade. So in this case, the average profit or loss, which can be expected per trade. So positive values indicate profitable strategies. If my technical trading strategy has 30% win rate and my risk to reward is 10, that's incredible. Then my expectancy is $2.3 per $1, which is risk. This part is still to be made a bit more clear, but apart from this, I think just identifying what should be the risk to reward ratio is good enough to see whether the technical strategy is helpful or there has to be something more to be done. There are some examples as well at the bottom, that if win rate is 70%, then the risk to reward ratio 1 to 0.5 will result in loss. And it is a high accuracy, but because of poor risk management, we would incur loss. It doesn't matter what strategy here is. I hope that is quite clear at this point. The balance strategy, we just saw that if it was 50%, then for break-even, we would need 1-to-1 risk-to-reward ratio. And the optimal strategy, which would be, let's say, 40%, and our risk-to-reward ratio is 1 to 3, then the result would be $800 profit on 10 trades. So we see that it doesn't matter what is our, again, it matters, but it doesn't matter whether our strategy has a high win rate. What really matters is how do we manage our risk. So just having high win rate does not matter. It should be seen in conjunction with the risk to reward ratio. If you manage this too, or if you identify where your strategy lies on this curve, if it lies on the right side of the curve, all is well and good. You are in profit, your portfolio is in green numbers. And on the other side, if you have a high win rate for your strategy, but the risk reward is not managed very well, then it's quite likely that you will fall in the red zone. So try to have a look for this tool, see if it is helpful or not. Let's use some reasonable number. Let's say my win rate is 30% and my risk to reward is 2, and that would not work because I'm in the loss area. But if I go to 3, then I am slightly above the break-even point. Usually developing a strategy which is giving you a 40% or 45% is, I would say, a decent win rate from a trading point of view. I mean, it's difficult to create a strategy and test it, but yeah, hopefully this tool can help you analyze your strategies. All right, enough with the risk reward and win rate tool. Moving on to the position size calculation. If you would have seen one of the previous videos, I did explain about position size calculation. That tool was in a very simple Google sheet, so or a simple Excel sheet, which is all right to use, but this is nicer. I think you can also switch on to the non-dark view mode, but let's get the dark mode. So what we see here is that there are 3 parameters which we can play around with. The first one is trading amount. So this is the total capital which you have available for trading. This is the account balance, or the portion of the capital you are willing to allocate to trading. For example, if you have $10,000 in your account, this would be 10,000. So in the previous video, I mentioned that I was more inclined towards that this trading amount is the portion of the capital one is willing to allocate to trading. So if I have $20,000 in my account, then let's say I use 10,000, and I want to risk 1% of my trading amount. So 1% of my trading amount would come up to $100. That means that if I lose the trade, so when my stop loss is hit, then I will lose $100. Now, depending upon how far my stop loss is, my position size is calculated. So if my stop loss is at 2.5% from the entry value, then my position size will be $4,000. So I will, let's say, enter a trade for $4,000, and I want the price to go higher than my entry value. And if it goes lower by 2.5%, then I will end my trade will be closed, and I will incur a loss of $100. Of course, I can close my trade much earlier before the 2.5%. But if I do it automatic, or if I already placed the stop loss order, then it will be $100. If I change here to 5%, we see that position size reduces as well. The further you go away from stop loss, you see that the position size also changes. There is one additional thing which I have added in this tool, is that your stop loss should be greater than your risk percentage. Your stop loss percentage should be greater than your risk percentage. The reason is that if it is equal to or less than, then you end up with taking a leverage. And if one is not a professional trader who has quite some experience with leverage trading, then this can get quite complicated, and one might completely lose everything in their portfolio amount. So this tool will always give you a warning that the stop loss percentage should be greater than the risk percentage. And if someone wants to modify it for using the leverage, then feel free to use it. Use this tool, check out the equations in the previous video, and adapt it for leverage. I will most likely create another tool where the leverage will also be included in the calculation. So do wait for other videos before I make that tool available. All right, now let's look at Bitcoin chart, and it looks pretty amazing. So we see that Bitcoin today hit all-time high with $113 per Bitcoin, or more than 113,500. Let's say, what was the all-time high? The high here is $113,788. That's incredible. In 10 to 12 years, Bitcoin has reached to such a high value. Its worth is just great, and it's a great moment for the crypto community. And let's see how it progresses, how it helps altcoins to also gain some value, and hopefully the Euphoria phase has begun and it's not the end of the Euphoria phase. So do check out this tutorial about risk-reward ratio with win rate and the position size calculation, and do hit the subscribe button if you like the tool, and do hit the like as well. And if you really like it, then share it with your friends. You can also support the channel by buying a coffee. You can click here. Oh, there is also dark mode. But I like in this one, Claude AI has made it much better with the light mode. It's much more clear. Sadly, I could not change a lot with the tool because it's still in early phase, this whole AI mania. But it's really great that we are able to create such tools in such a easy fashion. So do check this out tools. The link will be in the description. They will not cost you anything and they are free to use, and enjoy. I will see you in the next video. Have a nice time. Bye bye.